Hi traders, it's Eddie here from TradeView Investments and welcome to episode 6 of Trading Talk. I just want to let you guys know that next week we'll be holding our monthly trading strategy Mythbusters here in the office on Wednesday evening. So if you're in Melbourne and you'd like to come down, we'll put a link in this episode and you can register to come down. At the meetup, what we'll do is we'll take a trading strategy that one of you guys have sent us and we'll build it using EA Lab to see if we can get it working. In this episode of Trading Talk, we're going to be building the final version of Daily Hedge. So we've gone through a few different versions, and in this version we've actually made some pretty decent changes and been able to get it working really well. So if you haven't built any of the models up to date, that's okay. You can start this one from scratch and you'll have a model that works pretty well. So I hope you enjoy this episode, and until next week, all the best with your trading.
Hi traders, welcome to Trading Talk episode 6. I've got a special guest with me today. Todd is one of the developers at TradeView. He's actually a lot better at building with EA Lab than me, so I've pulled him in to help out with a few things. I'll introduce Todd in a little bit. First, let's start with our risk warning. This presentation is provided for information purposes only, and it should not be regarded as financial product advice. So, you remember the last version, it was Daily Hedge version 1.3. This one is actually version 2.2. The reason being is that we've actually changed a lot of things since the last version, and I've gone through a few versions of editing myself. So we are now at version 2.2. So I'll just take you back and you can remember what was happening in the last version of Daily Hedge. Basically, we got it to the stage where we had built the model so that if we had a bar that closed below the high of the previous bar and above the low of the previous bar, then we would close the trades out. And if we had a bar that closed above the previous bar, these are all for longs, then we would hang on to the trade. So that's about where we got it to. We also managed to just set a basic stop of 150 points below just 150 points below the current market price. So that was it. So we didn't expect too much from it, and it didn't really work as such. I'll just show you what that model looked like. So it was this one here. It was version 1.3. You'll all remember this one. What we took it to, where I first brought Todd in, was to help me out with a version 1.5, which I'll bring up now. What I'm going to do is I'm going to try and talk through the changes we made just in the EA, and hopefully you can understand what's going on the chart. So Todd, say g'day, Todd.
G'day, everyone.
Excellent, that's Todd. Todd will probably just correct me if I get anything confused here, because when Todd builds stuff, he always ends up building it a lot neater than me, and then sometimes I have to really think about Todd's logic, which is actually better than mine. So I'm usually pretty good at getting things built and getting it to trade. Todd's better at doing that, and then he also can make it look much neater. So Todd will help me out if we go wrong. So basically it works like this. So the first thing we're going to do is we're going to look at the account profit, and we put a little function in so that if the account profit is greater than a certain percentage, then we'll close out any of the trades. So a lot of you guys always ask about that. So say for example we're in profit by 1% of the account balance, then we'll close all the trades out. So that's this top section here. Then what we do is we go and look at any open orders, and we see if the order was opened on the previous day. So we're doing this at the start of each day. So we go and have a look at the orders that were open the previous day. If the orders, or if the open trades, or if yesterday's day was an inside bar, so we're calling it inside bar if the close of the day was lower than the high of the previous and higher than the low of the previous, then we'll close the order. So we're closing out anything that's an inside bar and doesn't break up or down below the previous day. If it's not an inside bar, i.e. that it's actually closed above the previous bar or closed below, we're going to trail the stop up to break even. So that's this little bit here. What we've done is we've, because we're looking at the stop loss from points by order open price, we're using this bit here where we're going to move it by stop loss times -1. Just doing that makes it an absolute value, so it works for long trades and short trades. So, alright, there we are. So we've trailed the stops up. Yeah, go to
Sorry, Eddie, the -1 puts the stop above the open price on a long or below the open price on a short?
Okay, so it's actually in profit.
Yes, that's correct. Yeah.
Okay, excellent. There you go. So if it's not going to do that, if it's a long order, why wouldn't it do it, Todd? So if you go, so we're going, if it's an inside bar, we're going to close it. If we don't close it, then, so it's not an inside bar, we're going to modify the stop loss to break even, which is actually above the stop loss because we've stopped one trade out. And then,
Yeah.
Okay. So if it's not an inside bar,
the bottom section is for orders that aren't from yesterday.
Okay. Yeah, excellent. So that's how we hang on to the trades from previous days. So any bar that closes above a previous bar. Oh no, okay, just from days that are yesterday.
Yeah. So for for yesterday's orders, we want to do this whole inside bar logic.
Mm-hmm.
But for orders that aren't from yesterday, then we use the normal ADR trailing stop.
Okay, excellent. And that's because we've got this here, isn't it? So because we've got order age in bars is less than 2, basically 1. So if it's not yesterday's bar, then we're going to go down to this section straight away, yeah?
That's correct, yeah.
Excellent. And this is our trailing with the ADR. So the way that we've trailed is we're trailing an amount of ADR below the low of the previous day. So you can actually use an ATR indicator, which is in here, basically in ATR indicator. But what we've done is we're testing it on the dollar yen, and we just went and put the indicator on the chart and had a look around about what it was. It's around about 100, 120, which is actually in price is 1.2, or is it $1.20, Todd? Yeah.
That's correct, yeah. 120 points, basically.
120 points. The reason we did that was because if we actually used the ATR or the ADR indicator, we set it to a period of 260, which is basically a year. So we want to look at the average range over a year. And we don't really have that much data. So we actually had probably less than a year's data, or just less, or maybe just about a year's. So what would happen is we won't get any reading on that until 260 bars have passed. So this is pretty close. And then down here we've just got the buy and sell as we did before. We're not actually using this take profit, it's set to 0. What we've done here is with this little inside bar function, we've just defined what the inside bar is. So as we said before, the bar close is less than the high of the previous day's bar, and the bar close is also greater than the low. So that's how we're defining the inside bar there. So we built this model first and we ran it. Let's do that and have a look at the results. Here it is, version 1.5. So we're not going to test these, and we're not going to do this in visual mode today because we'll just whip through them. So remember, the last version didn't really work, but that was okay. We didn't expect it to. We're on the dollar yen again. Now what we've done, actually I didn't explain this before, I'll go back quickly. If you go back and you have a look at version, where are we? Oh no, it was 1.2 was the last one we showed you, yeah? Alright, so remember when we were... no, maybe it was 1.3. Okay, yeah, so you remember version 1.3? We're doing this crazy bar count on the 5-minute because I was testing on the 5-minute chart. So what I've done now is I'm now testing on the daily chart. It's a little bit easier. In terms of accuracy, you guys can give me a call if you want to know how we've set that up. But basically what we're doing now is we're trading it on tick, but we're making sure that we've got enough lower time frame data to make sure that the testing is accurate. So we could test this on days going a long way back, but we don't have any lower time frame data to make it accurate. So from the 25th of April, we've got at least down to 5-minute data. So we're basically doing the same thing as before, but you've got to test on every tick here. Okay. All right, let's run it. Who thinks this is going to be good? All right, let's have a look. So that's churning away. Alright, let's have a look. Okay, so we got some results that look like this, which I was pretty excited about. So the first thing I always do when I get a back test like this, I think what's actually happening. So basically what's happening is we're opening the long and the short, and we're getting a lot of these inside bars, so we're just closing the trades out. So we're losing the spread all the time. Here, losing. Maybe there's a couple of small winners, maybe there's a couple of small losers, but we're mostly probably losing the spread. Then what will happen is we'll get a bar that probably looks something like one of these ones, and we'll get a big push up, and then we'll make some good profit. We'll stay in the trade, and then we'll make a big push up, and then we'll get some good profit. So that's what's happening here. So I kind of like the way this model works, because there's not a lot of risk when you're losing. You're generally not losing too big, but what happens is the losses can be sustained for a reasonable period of time until you get a big move in one direction. So overall, we'll have a look at the report. 8% drawdown. I mean, we'd like to probably get that a little bit lower, and we made about 12% profit over less than a year. So I think that's a pretty good outcome even as it is. Probably what I would do is to reduce the drawdown, I would just trade it in smaller size. Okay. Now let's go and have a look at what we've done with the next model. This is pretty cool. Alright, so this is version 2.2. Looks a lot cleaner, huh? So this is Todd's handiwork. I'm going to start building like this now with more functions. So I have been able to do some of this stuff for myself. For you guys, it doesn't really matter. I always think it's just important to get the model trading the way you want to, but as you continue to develop, you can start to build things into functions like this. So remember before, in 1.5, we had a few different sort of sections. We were checking for profit factor and a close here. These were some close conditions, this was the trailing conditions, and this was the open conditions. So that's how we've broken the functions down. So we're checking for the close, and looks like this. So I'll try and leave this open for a little bit so you guys who have been building this, and by the way, good work, everyone who's been building it, can try and build it. So what we're doing here is we've put the account profit in. So we're saying if the account profit is greater than the account balance times a profit percent. So it's going to be times 0.01, 0.02 for 1%, 2%, etc. It's a variable, we can change it later. So if we get a big move and it's higher than whatever factor we put in here, we'll close the orders straight away. If it's not, which will probably be most of the time, we're going to check and see if it's an inside bar. We've built up that inside bar logic the same as we did before over here in one of these blocks. I'll just leave that for a second, I'll come back so you guys can copy it if you want to. So that's just that inside bar logic in one of these functions. Alright, we'll collapse that. I love how that happens. Alright, so then we've said, so if it's an inside bar, we're going to go and look at all the trades, and if the order age in bars is equal to 1, so if it's yesterday's trade, and if this bit here is a little bit different. So if the order points, which means the amount of points in profit, is greater than a profit factor, which is a variable we've created, times the stop loss, then we're going to close order. So Todd, do you want to actually explain this bit for the guys?
Yeah, so what we're doing here is we're looking at how much profit the order is in points, and comparing that to the stop loss multiplied by some factor. So if we say the profit factor is 2, and if we say that the stop loss is, I don't know, say 10, then what we're looking for is the order to be in 20 points profit, and if it is, then we'll close it.
Excellent. That was much better explained than I could have done it. Thanks, Todd. All right, so that's the check for close block. So that's this one here. We'll collapse this. We'll look at the trailing stops. So most of these are actually the same as they were in the previous version. We've just neatened it up a bit into functions. You can see it looks a lot neater. So here in the trailing stops, we're going to look at all the orders, and any orders that are yesterday's order. So if the order age is 1, we're going to modify the stop loss, and remember we talked before about that -1 and why we had that. So that's the same as the previous bit that I built before. Then if it's a long order, we're going to shift it to 1 or an amount of ADR below the previous day low, and same thing if it's a short order above the high of the previous day's high. Okay, so that's trailing stops, pretty simple. That literally was the same as before. and then open daily hedge is pretty complex, so I'll bring that one down. This might take a little bit of explaining. We've just got a buy and a sell block. Very, very simple. So we've just got the stop loss. We're trading at $1 per point, and we don't have a profit target because we're just trailing. Okay, so that's the new model. I think I went through all the blocks there, so hopefully you guys had a chance to pause and have a look. Alright, let's go see how this one performs. So just to let you know, the main difference here between this model and the other model is actually only one thing different. There's only one thing different, Todd, yeah?
Yeah, in the check for close.
Yep, okay. So the thing that's different is this bit here, is this profit factor. So this was something Todd actually came up with, hence why he's on this episode. So before we were just closing out the orders if it was an inside bar, so we just closed them regardless. Now we're only going to close them if it's an inside bar and they're greater than the profit factor. So if they're in a loss, we're not going to close them out, or there'll only be one. And if it's in profit but it's not a very big profit, or it's not bigger than the profit factor times the stop loss, then we're not going to close it out. We'll leave it open. So what that means is if you get another move in the same direction as the trade you're already in, you've automatically stacked the trades in your favor. If you get a move in the opposite direction, that trade, if it's in profit, a little bit of profit, it might end up getting stopped out. Or if it's in a loss, it might end up getting stopped out. But what might happen is on the next day, when you open the next trade, that might hedge it at some point. Todd, were you going to say something?
No, it's all good.
Okay, cool. Alright, so let's go try this and see how it works. So this is version 2.2. I played around with the settings a little bit before. I'm sure you guys are all having a look at this. So the ADR value was around about 2, which is about 200 points below the low of the previous day's, below the low of the previous day's bar. So it was quite a wide stop, but that's okay. We're trailing. We want to give it a little bit of room. And the stop loss was quite wide at 85. So we had the average daily range of about 120. So we're basically waiting till maybe 3/4 of the day. The day's move to actually enter a trade. Okay, so we'll load. Oh, we did load that. Okay, so let's test this one. So it's the same time frame and everything here as the previous one. Let's run it. It needs some sort of music, Todd, don't you think? MT4.
Yes, an elevator music.
Yeah, I think that's pretty good. You reckon you could code that in?
I'm good, but maybe I'm not that good.
Okay, maybe we'll ask in the next version.
Unicorns on the chart, but not music.
You can. Oh yeah, Todd has made me a chart with unicorns on it. So, anyone wants unicorns? Todd's your man. That's a little bit of an in joke at TradeView. All right, let's have a look. We don't need that. Check that out, huh? That looks pretty good. What do you think, Todd?
I like it.
I think that looks pretty good. So similar thing as to before. It's a little bit smoother. Here's where we're obviously taking a few losses, but they're a little bit smaller. And when you do get these big moves, we're getting them quite regularly, and that's what's actually making us some money. So we'll have a look at the report.
I think this one also. Sorry, Eddie. I think this one also grows the account, or continues to grow the account towards the end. I think that's where the big difference is.
Excellent. Yeah, it did. What happened with the other one? It got a little bit flatter, didn't it?
Yeah, it flattened out a bit, yeah.
Yeah. So this one here had a little bit of a higher drawdown, 12.63%, which is a little bit too high. But the profit was 68% over less than a year, so 416 total trades. It's one long and one short per day. So it's about 208 bars, so it's about 3/4 of a year or something like that, maybe a little bit more. So just with this, because we made so much profit, it's no trouble to actually just reduce the trade size and we'll still make plenty of profit, and that will bring the drawdown down. So that's not really a concern, but I probably wouldn't trade it at that size. Okay, traders, so there you have it. That's actually going to be the final version I'm going to do of Daily Hedge for you guys. I might do a little bit more work on it myself. What I'm going to do now is I'm definitely going to run it on a demo account and just see how it performs in real life. But really, it's a pretty simple strategy, so there's no reason it shouldn't perform too dissimilar from the testing. So it looks like that might be a really good model. I just want to say thanks very much to Todd for coming and helping me out and hanging around. It's about 11:15 on a Thursday night, so I appreciate that.
No worries.
Thanks, man. And thanks to you guys who've been watching through this Daily Hedge series. Next week I'm going to come back with something completely different. I'm not sure what it's going to be yet, but hopefully it will be really good. What I will do, like I said, I'll run this on a demo, so if anyone's interested in tracking the results, obviously build it yourself, or if you want, you can give me a call and ask. If you've got any questions about anything we've done throughout this series, then let me know. The one thing that I think is really cool about this Daily Hedge series is that we started with a really basic idea, and literally, I mean, you guys don't know, but I've just sort of, I'm busy at work and I'm doing other things, and I'm sure you're all busy as well. But whenever I've had a chance, I've kind of been mulling over some ideas, and usually about the day before, I'll try and build the model just to make sure I've got something to show you guys, and then I'll actually run it. So you can see how the ideas changed and developed from the very first basic model, and we've now been able to get some really good results. So yeah, that's about it. If any of you guys would like to contact me, you can do it here. If you want to join the trader development programs, if you're not already using EA Lab, well, hopefully this series has inspired you to do it, because it's not really that hard. Todd actually will help people out with support at TradeView, so if people have questions, we've got a support process you go through, but you will be able to get help with your model and be able to get it to that stage. There's absolutely no reason you can't build some good stuff yourself. I don't think I said this in the intro today, but if you don't have an IC Markets account, well, if you open one up through us, you'll get 25% discount on the already low IC Markets rates, so that's a good idea. I've already got a few guys getting some really good rebates, especially if you're an algo trader. You take a lot of trades and you'll get some really great rebates, money back. And that's it, guys. Again, thanks very much for watching this series, and until next time, all the best with your trading.